Hello, welcome to Sustainable Truth. My name is Otis, and today we are going through the latest Q2 of 2022 Tesla earnings, latest company updates, and much more. Stick around and let's get into the video. Okay guys, so let's get into this. First of all, we're gonna go into the summary. So Tesla has continued to make significant progress across the business during the second quarter of 2022. Though Tesla has faced certain challenges, including limited production shutdowns in Shanghai for the majority of the quarter, Tesla still has achieved an operating margin among the highest in the industry of 14.6%, positive free cash flow of 621 million, and ended the quarter with the highest vehicle production month in history of the company. New factories in Berlin, Brandenburg, and Austin continue to ramp in Q2. Gigafactory Berlin reached an important milestone of over 1,000 cars produced in a single week. Now, I believe that number is already higher than 100 cars per week. Going on to Austin factory, the first vehicles with Tesla made 4680 cells and structural battery packs were delivered to US customers. They are continuing to invest in capacity expansion of the factories to maximize production. So that means they are still expanding and optimizing factories in Fremont, Shanghai, and Giga Nevada to increase production speed. Going on to energy business, Tesla made meaningful progress in Q2 as well, achieving higher volumes with stronger unit economics. This resulted in an overall record gross profit in the energy sector. Customer interest in our storage products remains strong and well above production rate. So again, they can't keep up with the demand. So I think this is both for solar panels and Tesla Powerwall and also energy storage. With each of the Fremont and Shanghai factories achieving their highest ever production months and new factory growth, Tesla is focused on a record-breaking second half of 2022. Operating cash flow less capex, free cash flow of 621 million in Q2 and total 0.8 billion increase in the cash equivalents in Q2 to 18.3 billion. Now that 621 million, which seems quite low, we will talk about that later in the video as well. This includes sales of Bitcoin and things like that and the reasons for it. Going into financial summary, we're just going to have a quick look of the numbers. So looking in the comparisons from Q2 2021, looking at the revenues. So automotive revenues, these are in millions of dollars, except for percentages for share data. So looking at the numbers, they're increasing by at least 2 billion every quarter, except for Q2 2022, which is down to 14 billion 600 million. And year over year, 43% growth, of which regulatory credits, we can see it's not that much anymore. So it's actually down 3%. It's down this quarter as well, but they're not that significant to Tesla anymore. So going on to financial summary. The total revenue grew 42% year over year in Q2 to 16.9 billion. Year over year revenue was impacted by the following: growth of vehicle deliveries. This is including new factories and opening up and all things like that. Increased average selling price. Now the increase in price is due to both supply constraints, but also high demand. That's why Tesla keeps increasing their price of cars. Also growth in other parts of the business. So looking at profitability, Tesla's operating income improved year over year to 2.5 billion in Q2, resulting in 14.6% operating margin. Year over year, operating income was primarily impacted by the following. So increased asking selling price. Again, that's due to high demand. Tesla, you have to wait 6 months or sometimes even more. Profit growth in other parts of the business. We will talk about that. Lower stock-based compensation expense. I assume this is because Tesla's stock is trading lower now. So the compensation for some of the executives are also costing less to the company. Higher raw material, commodity, and logistics and expedite costs. So again, inflation, raw materials are going through the roof, high demand for different metals, for batteries and such. Higher per unit fixed costs in Shanghai due to shutdowns. This is one of the main things that impacted Tesla and prevented them from getting another record quarter. Now looking at Bitcoin, As of the end of Q2, Tesla has converted approximately 75% of their Bitcoin purchases into fiat currency. This is because they had to increase their free cash flow due to all the unknowns in regards to Shanghai shutdowns, because the factory has been shut down. They basically didn't know for how long it's going to be shut, so they were just preparing extra cash if they needed that. Elon Musk has also said that he's looking to buy back some Bitcoin in the near future. So looking at operational summary, Model S and X production is actually up 601% year over year. Now, there was some downtime in Q2 2021, so that's why the numbers are so low. So it looks like a huge increase. But there's actually an increase of more than 2,000 units in a quarter from Q1 2022. And then obviously the Model 3 and Y production is down from last quarter of 291,189 to 242,000. So it's actually down quite a bit. Now, if you look at year over year from Q2 last year, there was a 204,000. So it's still a 19% increase, but it has been impacted by the COVID shutdowns. So we are seeing lower numbers. Total production year over year, we are up 25%. But again, this was reduced quite a bit because of the Shanghai COVID shutdowns. So going on to global vehicle inventory, days of supply. So Tesla, it's actually down 56%. So it just shows that the demand is high. So global vehicle inventory, days of supply is actually down from last year. So it's down 56%. So that just goes to show that there is still high demand, and it's also the Giga Shanghai factory shutdowns was affecting production, and therefore the inventory is quite low. Going on to solar. So solar deployed is actually up quite a bit. So it's 25% up year over year. So that's another good sign in this branch of the business. Store and service locations. These are basically like dealership places. So that's up 19% as well. In Q2, there was 709 new ones that opened up. So Tesla is definitely expanding in that regard as well. And mobile service fleet there was another 1,453 mobile service operatives added, so 33% increase also. Looking at supercharger stations, this is another big one, so it's up 34%. In Q2 2022, there was 3,171 new supercharger stations added, so we will look at another chart later on. So we are starting to see quite big numbers of mobile service stores and service locations and supercharger networks being expanded quite rapidly. So one quarter, that's 3,970 new superchargers, which is quite a bit. So that's really good news. Now looking at annual vehicle capacity in California, a Model S and X, that's the Fremont factory. So we're looking at 100,000 per year, and then Model 3 and Y at 550,000 a year. Shanghai, Model 3 and Y, they're showing more than 750,000. So there's a lot of new upgrades going on in Giga Shanghai, as I talked about it in the previous video. Giga Berlin, more than 250,000 a year of Model Y, and Giga Texas, more than 250,000 as well. So it will be interesting to see these numbers. What kind of numbers are we gonna get through the end of the year? Are these gonna be more, or are they gonna be around the same? So we will keep a close eye on that. So just doing a quick calculation. So if we go 100,000, add in 550,000 plus 750 plus 250 plus 250. So we're looking at 1.9 million cars a year for year 2022. It's not clear if they're going to reach this number because there was constraints, there was COVID shutdowns in Shanghai, but these are saying it's more than 750. So it's going to be interesting to see. I think this number is realistic, but we're just going to have to wait and see until the end of the year what actually happens. Now going on to core technology, so autopilot and full self-driving. So this is a very interesting one. So as of the end of Q2 2022, over 100,000 Tesla drivers in North America had the access to FSD beta. Basically, they're launching FSD beta to many people at the same time. For the AI, the more data it can get, the faster it's going to learn. If we look at October, November, this is 2020 going into 21. These are millions of miles driven. If you're looking at the graph, it was quite shallow. Everything was going bit by bit. But then up from here, from the end of last year, you can see it's going up quite rapidly. And in the last few months, it's gone up very sharply. So that's an increase in almost 10 million there just in a few months. It will be very interesting to see which way this graph is gonna go, because so far this looks like exponential growth. Basically, I think this might be solved this year. I know there was a lot of people talking about Elon Musk saying that the FSD is going to be solved this year, every year. But like looking at this and looking at the different videos, how good it already is, it will be really interesting to see what's going to happen in the next few months. But nonetheless, in my opinion, this is a really, really good sign of what's actually going to happen. So it looks quite good to me. So looking at a few other things in the vehicle software, Tesla has introduced adaptive suspension in North America. If your car have adaptive suspension, so basically now automatically it's going to adjust a more comfortable ride height before encountering a section of rough road, informed by continuously updated data collected by the fleet. Basically the AI, they're gonna use the data that they're gathering. Remember, loads of data increasing exponentially. So they're gonna use that to predict where it's gonna be some rough roads, and they're gonna make your ride smoother. So that's a really good thing. I don't think anyone else is doing this at this point, any other automakers. If they do, please let me know in the comments. It will be interesting to see. Also, the latest vehicles use Tesla Vision to tighten the seatbelts earlier in a wider array of frontal crashes. So basically Tesla is going to lower the occupant acceleration with the vision system. So they are going to see the crash before it's going to happen, and they're going to tension the seatbelts. That's going to prevent more injuries. The green line is basically saying where if you were just had the seatbelts on, so your acceleration, and then that's very sudden stop of acceleration. So, and then belted with pre-tensioner, so that's a bit smoother, because when you crash in those split seconds, there's a pre-tensioner, it's gonna blow and it's gonna tighten up your seatbelt. And now this is with Tesla belted with the vision system. You can see the line is quite much smoother. So this is probably the crash is occurring around here. Smooth restraining, and that kind of helps to keep you in place and avoid injuries. Again, I don't know any other company that does this, but yeah, that seems to be few extra safety features added to Tesla cars, even though it's already one of the safest cars on the roads. That just goes to show that they keep increasing the safety. So that's really nice to see. So there is more about battery powertrain manufacturing. The architecture of electric vehicles allows Tesla to rethink the vehicle design and the manufacturing process beyond what was possible in the combustion engine era. So basically Tesla is reducing the number of robots in body shops and many different places. They're reducing it by 70%. They're also stating that their quest for the simplification is not over, and they will continue to drive simplification further with every new factory. This is just basically a comparison to see that Model S Fremont, that's how many robots they had. Then looking at Model 3 Fremont, this is way less, and then Model Y Fremont, and then if you're looking at Giga Austin and Giga Berlin, they are quite much lower. Actually, if you look at Giga Berlin and you look at Fremont, it's quite a big difference. Just to touch on that point, Elon Musk has been saying that they are going to focus really hard on manufacturing and efficiencies. So this is definitely, you can see some results happening here. And that's what Tesla is aiming to be the best at. So looking at other highlights, again, Tesla energy storage, if you just have a quick look at the graph, they actually had the best quarter ever for their energy storage. So they are going to ramp up that segment as well. Now they've been quite focusing a lot on their new factories and things like that. Once that kind of settles down, they're going to really ramp up their storage and solar as well. Looking at solar, Solar developments increased by 25% year over year, so to 106 megawatts. So that's also looking quite good. There's more increases in that. Looking at services and other things, like I said, Tesla is expanding both in service stations and in supercharger networks, so that's quite good to see. So then again, looking at the supercharger stations, this is 2018 Q3, they were doing about 1,352 stations per quarter. So it's not that they're keeping up their superchargers installations in different places, but they're actually increasing the amount of stations that they do each quarter quite a bit. So actually from 2018, that has actually doubled. Yeah, so Q2 2022, they've done 3,971 supercharger stations, which is quite a lot. So, and this graph is trending upwards again. So you could be looking at end of next year, they could be doing 5,000-6,000 stations every quarter. So there is going to be a lot of places to charge for people. And obviously they're opening some of these stations to non-Tesla EVs also. That's gonna generate revenue for the company as well. So looking at the outlook of the company, looking at volume, Tesla plans to grow manufacturing capacity as quick as possible. Now that's being said over and over again. Elon Musk, he wants to be the best at manufacturing, and that's what they're trying to achieve, the volume and the efficiency. Over multi-year horizon, they expect to achieve 50% of annual growth in vehicle deliveries. The rate of growth will depend on the equipment capacity, factory uptime and things like that, supply chains and so on. But if they can actually achieve this, which they have achieved so far, the numbers get very, very high very quickly. So looking at the number that we looked at before, 1.9 million units, that's the reference from the total cars produced annually by Tesla. If we are going to add 50%, which is 950,000 cars, so we're looking at 2.8 million in 2023, and then we're looking at 4.2 million in 2024, and we're looking at 6.4 million in 2025. So guys, just to quickly summarize the calculation of the cars produced each year. So looking at 50% year over year growth. So if Tesla is going to produce 1.8 million cars in 2022, then again, as we looked at 2023 is 2.7, 4 million, 6 million, 9 million, 13.6, and then it goes really, really crazy. So it goes to 20, 30, and then 46 million. As you can see in this graph, it's pretty much up to 2026, 27. We are going quite linearly, even though it's still big numbers, but from then onwards, it kind of just gets crazy. We still have to see if they can keep up that 50% year over year growth from year 2027 through 2030. But if they can, that's going to be enormous. And then again, looking at cash, Tesla says that they have sufficient liquidity to fund their product roadmap, long-term capacity expansion plans, and other expenses. Basically, what they're saying is that they think that they are able to sustain the 50% average annual growth over the coming years. Looking at profit, while they continue to execute on innovations to reduce the cost of manufacturing and operations over time, they expect their hardware-related profits to be accompanied with acceleration of software-related profits. So basically what that means is the FSD beta is going to graduate in a full software. That's going to be a lot of extra cash for Tesla. And then looking again at the product, the pace of production ramps in Austin and Berlin will be influenced by successful introduction of many new product and manufacturing technologies in new locations and ongoing supply chain related challenges. So factory ramps take time, and Gigafactory Austin and Berlin will be no different. They're making progress on the industrialization of Cybertruck, which is currently planned for Austin production subsequent to Model Y ramp. So looking at Cybertruck, they were also saying on the earnings call that they're looking at mid-year 2023, another full year from now before they begin deliveries. Okay guys, so to summarize, basically Tesla is in a really good spot in my opinion. So there has been some Giga Shanghai shutdowns in the first quarter of 2022, but most of the numbers for the second quarter, they're actually record numbers. So there is no point to think that Tesla is actually slowing down. They're speeding up, they're increasing the production, they're increasing their solar, they're increasing their storage, supercharging network, service locations, and deliveries at the same time. It will be very interesting to see new product developments, but I don't think we are gonna see anything new coming out anytime soon, except for the AI day that's going to happen in September, I believe, and that's really it. So thank you for watching my video. I hope you enjoyed this in-depth earnings review. And please like, subscribe, and leave any feedback. It's highly appreciated. Guys, thank you again for watching, and see you on the next one.